The hardest thing in the world to understand is the income tax.
The first step in any tax inquiry is to consult a tax statute. I'm Allison Christians.
And I'm Leandra Letterman, and it's time to break into tax.
In this video, we're talking about how to read a tax statute. That's a universal goal. We're going to use the U.S. Internal Revenue Code as our source document, but the principles are general in nature. We've got 6 rules to get everybody started.
The very first rule of reading a statute is read on.
The second rule, browse the breadcrumbs.
Third, follow the cross-references.
Fourth, consider code clashes.
Fifth, scan section 7701.
And finally, spot the secretary.
Where tax attorneys sometimes get into trouble is not the code section they're familiar with, but the ones they're not familiar with. So there may be more in the statute than initially appears. And sometimes that might be in the particular code section itself. So there might be something later in the code section that modifies the general rule stated at the beginning of the code section. And so it's particularly important to read the whole statute. And if you're using a physical book, make sure to turn the page in case there's more. But even if you're not, read on within that code section.
Have you ever had that feeling where you start reading the statute and you find the answer you like and you think, oh, good, I must be done? Read on is the rule that should pop into your mind at that moment, right? Because you've got to keep going and make sure there's not an exception or a caveat of some kind. Or the opposite can happen. You start reading the statute, you think, oh, I can't have the thing I want. But if you read on, you might find it. It's in one of the exceptions, and it might be at the end of a very, very long statute.
Let me give you a basic example. A lot of sections start with a general rule, and on the deduction side in the US federal income tax, sometimes the general rule seems very generous, but then it's narrowed later on in the section. For example, Internal Revenue Code section 165 on losses says in subsection A, there shall be allowed as a deduction any loss sustained for the taxable year and not compensated for by insurance or otherwise. So this says any loss, there shall be allowed as a deduction any loss. Sounds really all-encompassing. But if you just look down to subsection C, there's a big caveat that there's a limitation on losses of individuals. For individuals, the deduction under subsection A is limited to only 3 types of losses. So that's an example where just reading on to a subsequent subsection will show you that the general rule is subject to important limitations.
Okay, the second rule was to browse the breadcrumbs. What are we talking about?
The Internal Revenue Code is organized in a logical way. And as we'll discuss later, it's really helpful to know where in the Internal Revenue Code you're finding something or are supposed to look. For example, when I shared code section 165 on losses, there were breadcrumbs at the top. So here are those breadcrumbs in blue links, and this shows a particular organization. We're in the US code, Title 26, which is the Internal Revenue Code, and then subtitle A is income taxes, et cetera, all the way down to the section that we're in. So I think it's helpful also to look at the organization of the Internal Revenue Code. So here it is. You can see there's just subtitles A through K. And then if you click on subtitle A, it's organized into chapters. Chapter 1 has these various subchapters. Subchapter A has various parts. Then in part 1, tax on individuals, you find the very first sections of the code, including section 1, which is the tax imposed on individuals. And again, you can see exactly where we are in the breadcrumbs so that when we get to the very next rule relating to cross-references, you'll know the meaning of cross-references because you're familiar with these breadcrumbs.
I really like the breadcrumbs. Another metaphor is a roadmap. I always like to know sort of where am I in the statute, and the breadcrumbs is a very easy way to just immediately discern which part of the code you might be in and start thinking that the organization of the code tells you something about the substance of it as well. And that brings us to our third rule, which is follow cross references. The name indicates what it is you're doing. You're following a reference to something else, somewhere else in the code, or maybe not in the code.
A lot of code sections are not fully self-sufficient. They're pointing to other code sections or subsections that in effect are incorporating by reference. Here's an example. Code section 1001 on the determination of the amount of and recognition of gain or loss. Subsection A provides that the gain from the sale or other disposition of property shall be the excess of the amount realized therefrom over the adjusted basis provided in section 1011 for determining gain. So this is directing the reader to section 1011 to determine basis. And so without having that information, it's difficult to apply section 1001.
So sometimes you feel like you're on a scavenger hunt when you're in the tax code, but these little cross references are markers. They tell you exactly where to go next to find your next treasure.
That's right. And so if we go to section 1011, it actually tells us that the adjusted basis for determining the gain or loss for the sale or other disposition of property is the basis determined under section 1012 or other applicable sections of this subchapter and these various subchapters adjusted as provided in section 1016. So more cross references. So you might want to make a little flow chart or list or diagram for yourself that kind of tracks what you're cross-referencing until you actually get ultimately to the X marks the spot on the treasure map where you've found the answer that you need.
And as our viewers know, here at Break Into Tax, we love basis, as you can see by watching some of our other videos. All right, that brings us to our fourth rule, which is to consider code clashes.
What do you do if two code sections seem to conflict or two subsections within a code section seem to conflict? Sometimes I hear answers based on rules of statutory interpretation. But before you get to any canons of statutory interpretation, consider whether the code itself resolves the conflict. Here's an example. Internal Revenue Code section 119, meals or lodging furnished for the convenience of the employer, has a general rule in subsection A about meals and lodging furnished to the employee's spouse, and the employee's dependents pursuant to employment. But if you scroll down to subsection D, there's a more specific rule that applies to lodging furnished by certain educational institutions to employees. And the rules are not the same. There's some different limitations. For example, subsection D has an exception in cases of inadequate rent. So the question sometimes arises, what do you do if it's lodging furnished by an educational institution? Subsection D looks like it applies, but subsection A, which might be more generous in some cases, looks like it could apply as well. And Congress did think about that. If you look at the wording of section 119D1, it says that gross income shall not include the value of qualified campus lodging furnished to the employee during the taxable year. When you see the word qualified in Internal Revenue Code section, that's a signal that a term is going to be defined, that it's a term of art, that it qualifies under the statute. And in fact, you can even see a link here on the website to the definition of qualified campus lodging. And if you click on the definition, it tells you that for purposes of this subsection, so subsection D of section 119, the term qualified campus lodging means, among other things, lodging to which subsection A does not apply. So that effectively provides an ordering rule. If the lodging meets the requirements of subsection A of section 119, then it's not qualified campus lodging and D doesn't apply. In effect, what this definition does is say that A trumps D.
So a code clash, it happens when it seems like the code is telling you two incompatible things at the same time. And what you're showing us is that when that seems to be the case, you have to read on.
If you see a code clash, read really carefully to see if the statute itself resolves it. And it's probably worth consulting some secondary sources to see if other people have identified this issue. Maybe the statute resolves it, and I've given you an example where it does. Maybe the statute doesn't resolve it, and judges, for example, have wrestled with it, and you might find some guidance in case law, or maybe the IRS has considered how to deal with it, and you might find some IRS guidance that addresses it.
Okay, that brings us to our fifth rule, which is specifically US based, which is SCAN 7701. But the principle is still general, and we'll show why that is so.
Code section 7701 is a general definitional section. A lot of terms used in the Internal Revenue Code are defined there. It's really helpful to be familiar with it, and it can be a resource for definitions, particularly of general terms used throughout the code.
7701 is one of my personal favorite code sections because it's just chock full of interesting definitions of things like person and corporation and resident. And even more fun than 7701 is the regulations to 7701, not the topic of this video, but something I love to look at.
The famous check the box regs on entity classification for unincorporated entities were promulgated under code section 7701. Here's code section 7701. It's just headed definitions, and it provides in A, when used in this title, the entire title 26, the full Internal Revenue Code, when used in this title were not otherwise distinctly expressed or manifestly incompatible with the intent thereof, these various definitions apply.
I love this language about when otherwise not distinctly expressed or manifestly incompatible. It invites a little statutory interpretation right there in setting out the terms of 7701.
That's right. Section 7701 has actually more than you might think in it. There's 50 definitions in 7701A. For example, Internal Revenue Code defined in section 7701A29. Section 7701 actually contains the codified economic substance doctrine.
I just want to add here that probably every tax statute has some kind of definitional provision that just has a list of words that are defined for purposes of the entire statute. That brings us to our sixth and final rule, which is spot the secretary. The secretary is all over the code, it seems.
Yeah, there are a lot of statutory provisions that delegate authority to the secretary to promulgate regulations. So for example, you'll see in section 301 and many other sections, instructions to the secretary. For example, in 301E4, the secretary shall prescribe such regulations as may be necessary or appropriate to carry out the purposes of this subsection.
Is that my secretary? Like I can just call my secretary and they'll tell me what the rule is?
No, it's a specific secretary. Actually, section 7701 defines secretary.
So we can go back to 7701 and find out who the secretary is.
That's right. Section 7701A11 capital B says that the term secretary means the secretary of the Treasury or his delegate. And who's the secretary of the Treasury? Well, that's defined in capital A. It means the secretary of the Treasury personally. The Secretary of the U.S. Treasury has a lot of power. For example, Code Section 482 provides that the Secretary can distribute a portion or allocate gross income, deductions, credits, or allowances among certain organizations, trades, or businesses if they're owned or controlled directly by the same interests.
So that gives you 6 rules to get you into your tax statute.
Thanks for joining us as you break into tax.
See you next time.